for the effectiveness of board of directors,
sustainability of business,
importance of ethics and corporate brand,
roles and responsibilities of chartered secretary,
and for all that you need to know about the principles and practices of corporate governance.
Join the conversation at Corporate Governance Platform,
showing on MITV UHF 43 and channel 255 on DSTV on Thursdays from 4:30 p.m. to 5 p.m.
Corporate Governance Platform, proudly brought to you by the Institute of Chartered Secretaries and Administrators of Nigeria.
ICSAN, the hub of governance professionals.
Hello and thanks for joining Corporate Governance Platform. The program is proudly brought to you by the Institute of Chartered Secretaries and Administrators of Nigeria, ICSAN, the hub of governance professionals. And we are broadcasting live from MITV Lagos. I'm Dr. Tunde Odeyemi. Today on the show, we are going to be looking at the role of external auditors on the integrity of corporate financial reporting. And to do justice to this topic is a distinguished fellow of Institute of Chartered Secretaries and Administrators of Nigeria, ICSAN, Mr. OLUSHOLA ALAMU, FCIS. Mr. OLUSHOLA ALAMU is a corporate governance professional and practitioner. Is a lawyer with master's degree in law from the Bradford University, United Kingdom. Is a member of the Nigerian Bar Association. Is a member of the Chartered Institute of Arbitrators, United Kingdom. Is a member of Maritime Arbitrators Association of Nigeria. Is a fellow of the Chartered Institute of Taxation of Nigeria, and is also a fellow of the Chartered Secretaries and Administrators of Nigeria, ICSAN. Mr. Alamu, you are highly welcome to Corporate Governance Platform.
Thank you for inviting me.
Okay, we are going to be discussing something that is very pivotal, especially to governance, and that is the role of external auditors on the integrity of financial reporting. And before I kickstart this conversation, I'd like to invite our viewers to be part of the show. To be part of the show, you can either ask questions or make comments. Send your comments or questions to 080-2323-1287. Send your comments or question via text message alone to 080-2323-1287. I take the number for the last time. 080-2323-1287. And we are discussing the role of external auditors on the integrity of corporate financial reporting. Mr. Alamu, once again, you are welcome to the show, and thanks for joining us. Let's start by asking, what exactly are the roles and functions of external auditors?
To start with, for the purpose of our neutral audience,
Okay.
who are not well lettered with regards to the purpose of external auditors when it comes to financial statement of companies. External auditors are supposed to be part of the controls put in place by investors with regards to the running of a business.
Okay. Part of control.
It's part of control. And the external auditor's role is to come and look at the financial statement of companies with regards to the running of the company financially and going concern, because investors are interested in going concern, that is the growth of the company and profits.
Okay.
They are supposed to rely on the sayings of the external auditors with regards to the financial statement, because they're supposed to look at it and give unbiased reports with regards to what they have seen as prepared by the management of the business on behalf of the shareholders.
Okay.
But is that a purpose? Is that really happening? I want to ask you, because with regards to external auditors' function and the trending events in the economy today, there is much to be desired in that investors and potential investors, they are looking more from the external auditors with regards to what they put up. Because they only talk about material misstatement. If there is no material misstatement, there will be no qualification. Their job, they have always said that their job is not to come and, fetch out fraud making. Whereas their job says that they should give an unbiased report with regards to the financial statement they have examined on behalf of stakeholders. So, why should they now be shying away from that responsibility of fraud detection? Don't forget, they also say that their report should be for a purpose of 1 year.
Okay.
With what is trending now, I have seen a lot of companies, after being reported to be doing well, something happens.
Okay.
I don't want to go outside of Nigeria. I don't want to go global now. I want to refer you to the days of Lever Brothers and Cadbury.
Okay.
What were the auditors doing? What was supposed to be their job? And the companies went aground for some time. So there is more to be desired when it comes to the role of external auditors.
Okay, let me come in. It's no longer news that some companies have actually gone under because of fraudulent financial reporting, or what some people will term as doctored financial reporting. Now, the question is there any link between external audit functions and risk management? And if there is, in what way?
Well, first of all, to start with, the job of the external auditors and risk management, the only link that I feel is there is that risk management is a control on its own, external audit is a control on its own.
Okay.
Risk management belongs to a different school of thought. External audit belongs to a different school of thought, in that they have been centered around financial reporting alone. Financial reporting and going concern. Whereas, when you talk about risk management, you are talking about different things alone, all together. You need to identify. When you identify, you quantify. When you quantify, you plan. For risk management, you need more than near accurate data. In risk management, there's really assumptions because you want to be foolproof. But auditors, because they are constrained with regards to information provided by the management of the business organization, they are restricted. But for risk management, they go all out. Now, risk could be for environmental.
Okay.
It could be for the available funds in the company for investment. It could be for operation. So risk is more or less more diverse than external auditing. But they are both control measures with regards to the management of a system.
Now, how does external auditors ensures the integrity of the financial statement? You have said earlier that they need to do more than probably writing on what they are given. they should detect, how can they ensure the integrity of that financial statement?
Don't forget, when we say integrity, it is loaded. Integrity means probity, truthfulness, accuracy for some other persons to rely on and make decisions. The external auditors, I would say, for them to be able to perform their job functions very well, they need to work together with the internal audit department.
Okay.
Because the internal audit department, they are more in the system. They are highly familiar with the operations of the system. They know the nooks and crannies of the business operations than the external auditors. The external auditors will always walk around limited information given to them.
Okay.
Furthermore, the external auditors will also function well if there is a silent whistleblower, silent, unknown, the man behind the screen, as part of the internal audit team in a business organization. Because I have not seen of recent in Nigeria where a whistleblower has been protected or where there has been punitive measures with regards to whistleblowing in any organization. I have not seen. I may be a bit ignorant, but I have not seen and heard of any. This whistleblowing issue, I want to take you back to the early 2000s. You know, whistleblowing, I think, emanated via these Sabanes and Oxley Acts from America when there was this financial meltdown. In America, the whistleblower is more than protected. There is punitive measure should the whistleblower be harassed in any form. But here, whistleblowing is not working, and whistleblowing will help the external auditors in doing their job better, in that whatever collusion, whatever cover-up that may happen between the fiduciaries of business and the internal audit department would have been blown out silently for the external auditors to work upon.
Very good. You have established the fact that for the integrity of the financial statements, both the external auditors and the internal auditors need to work together. Now, the external auditor prepares his report and says that this is true and fair view of the financial statement. What is the meaning of that true and fair view of the financial statement, and what is its relevance to corporate governance?
Now, the meaning of true and fair view. Now, you see, that is why I say the external auditors need to do more. They have come up to say that they have examined so books, and they are now saying that it has displayed the true and fair view of the financial statement of that company. True means that there is no falsity. Fair view means accuracy. Now, with regards to probably accounting statements, standard accounting statements, financial reporting council guidelines, that is why I said that there is more to be done on their part. Because you don't come out and give such a report when it comes to corporate governance. Because corporate governance says the fiduciaries need to be accountable to those who employ them to run their business on their behalf. So if an auditor, external auditor now says this is the true and fair view with regards to what they have examined on a financial statement, why shouldn't they be held responsible? Because with regards to corporate governance, external auditing is the moment of assurance.
Okay.
They are to assure. You see, when anybody picks up a financial statement, they are looking forward to who audited the accounting and the financial statement. So there the integrity of the auditors comes for interrogation. Do you get it? So, you see, there is this knowledge gap between the stakeholders and the auditors. Sometimes the stakeholders feel the auditors are not doing enough. Sometimes the stakeholders feel that with the evolution of fraudulent activities going on, the auditors ought to also need to up their game with regards to their design of audit program. So this, to me, the moment of assurance weighs more on the external auditor. That is why they need to come up with probably asking for more powers when it comes to the examination of the books of account of business organizations.
Okay, so the external auditors should ask for more powers in performing their role. If you are just joining us, it's Corporate Governance Platform, and we are having conversation on the role of external auditors on the integrity of corporate financial reporting. And of course, Mr. OLUSHOLA ALAMU, FCIS, is in the studio doing justice to that topic. And you can also be part of it by making comments or asking questions. Your question or comment should go to via text message to 080 2323 1287. 080 2323 1287. So thank you very much, Mr. Alamu, for expatiating on the role of external auditors and why they need to do more. So let's talk about the appointment of external auditors. The Nigerian Code of Corporate Governance recommends that the appointment, the reappointment, and even the removal of external auditors has to be done by the Audit Committee of the Board. Audit Committee of the Board. I think that is what is the provision of the Nigerian Code of Corporate Governance. Now, if the Audit Committee of the, what is the relevance or the importance of this provision in the Nigerian Code of Corporate Governance?
To start with, audit committees. Have they seen have you ever seen the audit committee of any business concern back and bite?
We should ask you.
I've never seen one.
Okay.
You see, audit committees, they are just there on paper. Their effectiveness is not being felt. Don't forget, audit committees, they are more or less of the board. They come to sit at the meetings like 3-4 times in a year. They don't really know what goes on much in the system. So, to me, for the audit committee to be relevant,
Okay.
I think there need to be more of professionals with regards to the job of the external auditors. If we are saying we want an audit committee in place for an organization, the audit committee should probably be a member should be a banker,
Okay.
a chartered accountant, somebody from ICSAN, a professional with regards to the operation of the business concern. For example.
So what you're saying, it may not necessarily be from the board and the shareholders. It can be external.
It can be external.
Okay.
So I'm talking about, with regards to the business, we need an expert from the banking sector, from ICAN, yes, from ICSAN, and a professional with regards to the operation of the system. In that, if my company is a pharmaceutical company,
Okay.
I need a pharmacist to be a member of the board of the audit committee.
Even if he's not a member of the board?
Even if he's not a member of the board.
Okay.
Now, if you can see now that there is good mix of the audit committee for them to be able to back and bite. Most of the time, members of the audit committees they are just there. I have not seen their effectiveness. So they are supposed to be a special control measure that should be functional. They shouldn't be silent.
Okay.
So then they can now be relevant with regards to screening the appointment of external auditors.
Okay, still talking about appointment of external auditors. There is a provision of the Nigerian Code of Corporate Governance that says external auditors should continuously serve for a maximum of 10 years. And a cool-off period of about 7 years before the external auditor can come back. What is the rationale behind this provision?
Well,
and how can it even make the financial reporting to have more integrity?
To me, personally, I think 10 years is too much.
Okay.
In that, there will be too much of familiarity of the external auditors with the system.
But you won't say that they need to know more about the system, even work with the internal auditor.
Yes. If you are competent and capable, if you are given a job, within a year, you study the system and know what to do because you have been trained for it.
Okay.
But where you have, even to me, in fact, it should be 5 years. So that this familiarity and relationship will not be too close. The more auditors get close to the system, the more there is room for possible perpetration and perpetuation of fraud. Possible. Don't forget that the board pays the salary of the external auditors.
Okay.
Don't forget. So we should.
So who plays the pipers?
Yes. So we should not allow them to be too close.
Okay.
That is why I said earlier on that the audit committee needs to be able to back and bite. They should not just come for sitting allowance 2-3 times in a year, that a lot of things will have gone wrong. Because the audit committee looks at the book of accounts after they have been prepared. They are even not as strong as the internal audit. So where is their relevance? They need to up their game also.
Okay, I have a text message here from Dr. Steve Okoli.
Okay.
Dr. Okoli here is saying that I think the external auditors are empowered enough to do their job. However, there is not enough punitive measure for their failure. And that is why we have not seen some external auditors go to jail for giving us fraudulent accounts. It's a comment from Dr. Okoli. He's saying here that the external auditors are empowered enough to do their job. However, there is no punitive measure against their failures. If not, we would have seen a lot of external auditors go to jail.
Yes, I will want to wave on the side of Dr. Okoli. When we look at the Provision of Companies and Allied Matters Act, 2020, with regards to dealing directly with the alter egos, I mean the administrators of businesses, when there is financial or administrative malpractice. The Company and Allied Matters Act already put in place that the companies which should be removed and dealt with. So, if really there had been punitive measures with regards to these external auditors not giving the relevant and important qualifications with regards to the examination of financial statement of companies, they will have woken up. That is, you know, I already said it, that they have more to do. You see, they are the interface of current and potential investors, because it is what they have written that to make people to say, okay, I'm going to company A to go and invest. It is their report that will tell Mr. B that I'm still staying with company F. I'm not selling my shares. So they can't run away with it. That word, true and fair, means a lot. It means a lot. I want to take you back to Liver Brothers. They have been audited many times. There is this thing called window dressing. The ordinary man out there does not know the meaning of window dressing. You said it, that's beefing up, polishing, making something look like what is not. That is what the external auditors and the management sometimes, not always, gloss over to affect the thinking of the stakeholders. So probably there should be punitive measures clearly stated. We have one on the part of the managers of businesses now. Let us have one on the part of
the external auditors.
The external auditors.
Okay.
Along.
And what Dr. Okoli is recommending here is they should go to jail.
Not going to jail alone.
Okay.
But whatever they have gotten in the process of the audit should be expropriated from them. When I say expropriated, should be seized from them. Not just going to jail, because if you go to jail, we'll still come out if you are lucky.
Okay, we have seen the importance of internal audit functions vis-a-vis the external audit functions. Can the internal audit functions be outsourced to the external audit firm? And if this is done, what are the dangers to the business?
Where should you, in the first place, give erasers to somebody holding the pencil? Whatever it is done wrong internally, the external auditors will gloss over it. Let me take you back to the days of Enron.
Okay.
They did tax function for Enron. They also do external audit function for them. So how do you expect them not to cover up for them? So there will definitely be a cover up. So there should be no correlation at all. It should never. They should always be both at arm's length. If you're a tax professional, give tax function to tax consultant.
Okay, that reminds me. I think there is a measure now to restrict non-audit functions to the external auditor.
Yes.
Is it supported by the Nigerian Code of Corporate Governance, the NCCG Code 2018?
Not yet. I have not seen it.
But it's in practice.
It's in practice.
It's in practice.
But
okay.
I think this is why the corporate code of corporate governance should now be updated.
Okay.
To be stated explicitly clear that these functions should not be merged together. You know, that was what happened during the financial meltdown.
Okay, let's still talk about the external auditors. Now, the report of the external auditors, should it go directly to the board, or should it go to the audit committee, who will in turn it over to the board? What is your view on this?
No. Like I initially said, the audit report should normally go to the board.
Okay.
Don't forget that the stakeholders put the business administrators there. and they know more of the operations than the audit committee. The audit committee does not have a permanent office in the system. They come once in a while and go.
Okay.
So definitely by the time the audit committee looks at the job of the external auditors, there will always be clash of interest. They can't know the job better than the board.
Okay. I don't have much time. I will just take about 1 or 2 questions, then we wrap up. Now, if there is a divergent opinions in a situation whereby the audit committee, right, disagrees with the external auditor's opinion on the financial statement, what should be done in such a way that the shareholders will know what to do at the AGM?
Come again.
In case there is a divergent opinions, the audit committee
and the
disagrees with some of the opinions of the external auditors.
Yes.
You know, they said the opinion of the external auditors will be true and fair view.
Yes.
And when this is submitted, the audit committee disagree with some of these opinions.
Yes.
So the question is, what should be done, especially when this report is going to be presented to the shareholders at the annual general meeting?
There should be a meeting with the board by the external auditors first.
Okay.
To look at the gray areas.
Okay.
Don't forget, the board, they are directly involved with the day-to-day running of the operations. The audit committee, they are not directly involved. They may not have the full understanding of the operations. I will continue to say, because they come once in a while, under 1 hour or 2 hours, they are gone.
Okay.
They always have divergent interests. They may be a member of, many boards.
Okay.
And at the end of the day, the board will still present to the shareholders at the AGM. Don't forget the AGM, the shareholders employs the external auditors.
Okay.
They are the one who employs. So everything will still go back to them.
Okay, thank you very much, Mr. OLUSHOLA ALAMU. But before I release you, let me ask this question, and this is relevant to ICSAN. Okay. You know, ICSAN being the champion of corporate governance, we all know that, right? Okay. Will you say, as an ICSAN person, or representing ICSAN now, will you say that the present provisions of the Nigerian Code of Corporate Governance 2018 on the roles and functions of external auditor is sufficient and is in conformity with best global practices?
It is in conformity with best global practices, but needs to be updated now.
Okay.
Remember, I mentioned something with regards to Sabanex and Oxley.
Yeah.
The 2 gentlemen that brought about that act. We need to probably include that principle in the corporate governance. And the suggestion of Dr. Okoli.
Yes, Steve Okoli.
Steve Okoli, yeah.
Should also be included.
Should also be included.
Okay.
So that when I perform my function, I have at the back of my mind, I am doing something that will make millions of people to take decision on what I'm writing. You understand? So that sense of probity should be behind my mind, that I need to be careful.
Thank you very much, Mr. OLUSHOLA ALAMU, FCIS. That is the much that we can take on corporate governance platform. We'd like to thank you for being part of the show, all our viewers, especially the man that sent a text message, Dr. Steve Okoli. We also like to thank the production crew for doing a good job. We invite you to join us again next week, same station, same time, for another interesting episode on corporate governance. I remain Dr. Tunde Odeyemi. Bye for now.
For the effectiveness of Board of Directors,
sustainability of business,
importance of ethics and corporate brand,
roles and responsibilities of Chartered Secretary,
and for all that you need to know about the principles and practices of corporate governance.
Join the conversation at Corporate Governance Platform,
Showing on MITV UHF 43 and channel 255 on DSTV on Thursdays from 4:30 p.m. to 5 p.m.
Corporate Governance Platform, proudly brought to you by the Institute of Chartered Secretaries and Administrators of Nigeria.
ICSAN, the hub of governance professionals.